Okay, and we are live. Good day to you. Thank you for joining us. If you are real estate enthusiasts, then this is a conversation that you definitely want to be a part of. I'm joined today by Snezana Todorova with BRX Mortgages. She's going to introduce herself, but our goal today really is to talk about some of the new mortgage updates, some of the pros and cons of these mortgage updates. How does it apply to you if you're a first-time home buyer? And lastly, we definitely want to touch on, what if you're coming up for renewal? You know, what, Snezana, do you see most people sort of picking in today's market? But let's dive into it. But please, this will be a quick conversation. But Snezana, do introduce yourself, please.
Yes, thank you so much for having me, Varsha, today. I'm excited to be here and, of course, provide some clarity as to what we have been hearing lately in the mortgage market space and how that may affect you and your situation as well. A quick intro. So as Varsha said, my name is Snezana. I'm originally from Bulgaria, but many people love saying my name. I can hear that in their voices. I've been a mortgage broker for, I would say, over 10 years now. And as a homeowner and landlord myself, I know that mortgages can be scary sometimes, right? But we are here to provide as much information as possible, guide you through the process from start to finish, and just make sure that you have clear understanding of what your options are. Because we get it, right? When you know what you are about to do, you feel more comfortable and confident, and you end up making the right decisions.
Oh my gosh. And like, you've nailed it. There is so much noise out there, whether it's about investing in real estate, like actively becoming a landlord, taking that first plunge and becoming a first-time home buyer. Do people even value home ownership today? Like, those are the conversations we're having on and on. And you know, the biggest thing when someone, you know, sometimes people have the steps reversed. You must find this as well. A lot of folks will call me directly and say,
Yes.
okay, I'm ready to go buy a house. And I'm always like, hold on, not yet. Go find the money, because the money matters first before you can confidently make any kind of play, offer, proceed in real estate, right? So I'm really curious, Nizana, about, you know, recently, the biggest headlines are 30-year amortizations are back, right? That's the biggest hot topic, at least more so recently, for first-time home buyers. Can you break it down a little bit? And I would even say maybe touch on some of the jargon on amortization, you know, like that clarity.
What exactly is amortization, right? How many people really understand what that is? So in simple terms, the amortization is the life of the mortgage. How many years it will take you to pay off your mortgage in full down to zero. So the government, it is proposed in the budget, and it looks like it will be taking effect as of August 1st. In general, up until now, for anybody who is making less than 20% down payment of the purchase price, the maximum amortization is 25 years. Now, what the government is changing is that for first-time home buyers and only a select first-time home buyers who are purchasing new build properties, they can make less than 20% down payment and also choose to have 30 amortization. Which at first, like when you think about it, it's, yes, it does have benefits, but also it has some drawbacks as well. Now,
of course.
with
And so it's only pre-construction, right?
correct.
This
So
change really only affects pre-con projects, which in themselves offer a different sort of threshold. Like for folks, you know, are they able to stomach having their money locked in for that long? Like that's a whole different conversation.
Yes.
Right.
And when you think about it, I would say that it's beneficial into, so let's just clarify. So what the 30-year amortization allows, those selected first-time home buyers who are lucky to find something in their price range. First of all, cash flow and having a lower monthly payment. So, you know, I love my numbers, so I did a little bit of crunching. So just as an example, let's say if you were to purchase $800,000 home, make the minimum down payment required, which is $55,000. If you go with 30 amortization, your monthly payment will be approximately $390 lower than if you go with 25-year amortization. So right now we're just comparing same purchase price, same down payment, just different amortization schedules. With the longer amortization, your monthly mortgage payment is lower by approximately $390 per month, which again, it's a good chunk of money. And
That's
for
a
the first time,
significant amount.
now, that being said, the second benefit I see again, unfortunately, it's not for all first-time home buyers, just first-time home buyers who are buying a newly built home, never lived in, never occupied before. It's the potential increase in purchasing power. And a second quick example I will give: a family making 150,000 gross combined income, they have $100,000 for down payment. With the options of going with 30 amortization, they would qualify for approximately $40,000 higher property. So, for example, in that specific scenario, 700 purchase price versus 740 purchase price if they were to
And
go with the higher.
that makes a difference.
amortization.
$40,000 makes a big difference when it comes down to offer time.
So
Right?
initially, when you hear those numbers, it does make sense.
Right.
It does have some benefits. However, when we look at the small print, there are some restrictions, and mainly, as we already mentioned, is the property, the type of property they're purchasing. Now, we still don't know if there would be some rate premiums. Now, again, this is only for first-time home buyers buying new construction homes making less than 20% down payment. When you make less than 20% down payment, the mortgage needs to be insured, and there is also mortgage insurance premium added to the mortgage. We don't know yet if that premium would stay the same or change. So this is something that we will be waiting for some additional.
So they're just married to that purchase price a little bit longer, 5 extra years, right? Like in making that payment over, while you see the more immediate benefits on a monthly basis, but the long-term benefits, do they actually exist?
The downside, of course, we spread the mortgage over 30 years, you end up paying more interest down the road. However, on the other side, when we compare, if you were to buy, if you are able to purchase, but however you choose to rent, when you pay the rent, more or less, this is also the money that you pay for rent are, I would consider that like 100% interest, because you do not get anything back eventually.
For sure.
So
absolutely. Absolutely. Okay, so that's sort of an immediate breakdown on that 30-year amortization, the new sort of product that's available or option that's available as of August 1st, did you say?
Yes.
Okay. Now, there exists already, for first-time home buyers specifically, because we're talking about that right now. There's the option of pulling from RRSPs. There's and then paying the home buyer's plan. Right? Have there been changes? I believe there's been changes with that as well.
Yes.
What does that look like? And is that also going to, increasing the RRSPs? You think, oh my gosh, that's awesome, I can use more, but is saving really realistic in today's climate?
This is also, again, in theory sounds great, and this would benefit potential home buyers who are already have excellent savings habits, and they've already been able to save up more than $35,000 in their RRSP.
Can you break down, Snezana, what the home buyer's plan is?
Yes,
and how you apply your RRSPs, what percentage, and how long you pay, like that kind of?
Absolutely. So I know it's confusing because there's so many different programs for first-time home buyers, and of course that's my job when I speak to a first-time home buyer to describe and explain every single program and the benefits and drawbacks. So Home Buyers Plan is a program for first-time home buyers that allows to withdraw as of today. Basically, it's still $35,000, but it will change to $60,000 per person for after April 16th. So a borrower can withdraw tax-free that fund from their RRSP, and use that towards the down payment or closing costs towards the purchase of the home. Then that money has to be repaid back into the RRSP over a period of 15 years.
Right.
So,
And that is your home buyer's plan payment.
correct. So the benefit of that is when you put money in your RRSP, you get a tax deduction where you can potentially, you will pay less income taxes. Ideally, you will get a refund and use that refund to again pay back into your RSP. Or the other great program is the first home savings account.
Yes, let's touch on this. This is a conversation that I'm having more of. So yeah, please do.
Yes, I feel like the first home savings account is by far the best product a first-time home buyer must utilize, because it gives you the opportunity to, when you invest money in your first home savings account, again, this is tax deductible. You can apply this as a tax deduction for when you're filing your taxes the following year, and then you save the money there. Any interest you earn is tax free, and also when it's time for you to withdraw the funds, there is no tax, and also there is no repayment required, and there is no minimum time the money has to be in your account, unlike the home buyer's plan, where in order for you to withdraw the funds from the RRSP account, it needs to be there for 90 days.
Right.
Yeah.
Does this sort of mirror a TFSA? The first
Yes,
home savings account?
exactly. So that's a very good comparison. First home savings account has the benefits of the TFSA and the retirement saving plan. So you put money in the account, you claim tax deduction, and then when you take out the money, there is no tax and there is no requirement to pay it back like a TFSA.
Right.
So,
okay, so fabulous. But they haven't changed any of those parameters surrounding the first home savings account.
So I wish they increased the maximum limit for the first home savings account. Currently, it's only 8,000 per year, up to 40,000, and that's per person.
Okay.
Which again, still, if you, again, it's over time that you can save into your first home savings account, then potentially earn some income, withdraw. The key here when using first home savings account and the home buyer's plan is to make sure whatever tax refund you get, you apply that back into one of the accounts until you max those out.
Yeah, it's maxing it that really is where you see the benefit of such an account. Okay, good to know. So, in speaking with folks who are first-time home buyers, I think touching on this is crucial. It's everything, really. And then, what about those of us who have active mortgages today? I'm sure you're having this conversation a lot lately as well. I'm having it within my own friend circle. I'm having it personally in our own homes. And it's, what do? You're coming up for renewal. There's all this buzz right now about rate cuts. There's actually more buzz saying, hey, listen, I don't actually know if a cut's coming anytime soon. There's various conversations happening all over the place. So if someone were to come to you today and say, hey, I have a renewal coming up, where do you, and I know it's a case by case scenario, it's not a one size fits all, but what are the preferred rates? What are the preferred products out there today?
I feel like at this moment, and I see most borrowers comfortable with a shorter fixed term, knowing, and that again totally depends on their risk tolerance and also overall family situation, monthly budget, because there are different types of personalities and also different mortgage products available as well. For example, for somebody who has locked in 4 years ago at, let's say, 2%, and all of a sudden now their interest goes up to 5%, they would have some payment shock to deal with. And this is something that we can kind of try to minimize and explore if maybe we can increase the amortization, or maybe if there are any other debts outside of the mortgage, we can consolidate those into the mortgage. Just at the end of the day, I start the conversation with, where would you like, in an ideal world, where would you like your monthly mortgage payment to be at? And
Oh,
then
for
from
sure.
there, you can kind of work through different strategies to see if that's possible.
Managing that monthly payment
Mhm,
is so important to maintaining a lifestyle.
mhm.
Whatever your lifestyle is, I think there's such a focus on this interest rate.
Yes.
Um, but I mean, and I get it. Like, it's jarring when you go from a 2% to a 7%. Like, it's insane, right?
Absolutely.
But you have to sort of break it down to your monthly payment. I think that's where the benefit of working with a broker that's looking out for all aspects of your life, finding a way to consolidate debt, like you said, to make that monthly payment and that interest rate, capture a rate for all of your outstanding debts, perhaps. That makes the most sense for you.
When you think about it, and I always tell that to my clients, yes, initially when we're shopping for a mortgage, rate is important, but then once you actually have the mortgage, what comes out of your account every month is your monthly payment. It's not the interest rate. Sometimes
It's
they
not.
it's not, and believe it
It's
or
not.
not, there is so many, well, now because rates are increasing and people are more aware of what their current rate is and trying to
Yeah.
get some calculations, but sometimes clients forget what rate they have. Like
Yes, most people forget it.
so it's all
Absolutely. Oh, you're absolutely right.
monthly payment, budgeting, just making sure that you you're able to pay up your bills, and also you don't have to resort to other sources of let's say unsecured debt to make
Yeah.
ends meet. So,
Yeah. Can I ask you, Susanna, you just brought up a conversation I had last week. So
mhm,
it's a little off topic, but it's still on topic. I had someone ask me, I've lived in my property for 2 years now. So they have a mortgage 2 years in. And the immediate question is, oh, is it okay if because they want to upsize or downsize or whatever the case, is it okay if I have to do that? What does my penalty look like? Like, those are questions that I'm sure you hear of all the time. And my immediate response is, you need to ask your mortgage broker this question. But what would you say the journey of someone who's been at a home for 2 years, 3 years, they still have outstanding term left on their mortgage? What does that look like? Is it porting? Is it offering something different? Are there penalties? Like, how does that roll out?
yeah, absolutely. And this is again, it comes down to if they're buying a bigger home, most likely they would need to add more money to the mortgage. I
Right.
would say that 95% of the mortgages are portable, with,
Right.
of course, some restrictions
Of
always in the
course.
small print. But ideally, this is always the first option we explore, especially if they have a low rate that they already maybe have 3 years left at, I would say, like 2.5 or 3%. I would recommend, number one is to explore the option of porting the current mortgage,
Hmm.
and add separate additional money that they need for the new purchase. This would be number one.
Right.
In the event where that doesn't work, or maybe the lender doesn't allow porting, or maybe there are more restrictions. For example, some lenders allow only 30 days between the two closing dates in order for,
Okay.
so they're anywhere from 30 days all the way up to 120 days. With majority of lenders, I would say 90 days between the two closing dates. So
Mm.
porting doesn't work, then unfortunately at that time we will have to explore other option, paying the penalty. However, because again, every lender has totally different ways of
Absolutely.
calculating the penalty. However, because current rates are much higher, the likelihood is that the penalty would be lower at the moment. Again, subject to every
Of
lender.
course. Of course.
But in general, penalties are enormous in a rate environment where the borrower has a higher rate and rates have come down a lot. So for a borrower who is looking to go from a higher rate to a lower rate, they will pay a higher penalty than a borrower who is looking to move from a lower rate to a higher rate. If that
Right.
makes
And
sense.
it makes sense.
Yes.
Yeah, I can understand that. Like, I can see it at least. Whether I understand it and agree to it is a completely different scenario, and I don't need to go there. Okay, I think we've touched on some really important things, because these are active conversations that I'm having. I know you're having these active
Yes.
conversations for a fact. Um, some of these changes don't happen until August. April 16th, you mentioned with the increase.
Yes, so for the amortization extension, August 1st,
Right.
where the home buyers plan, so borrowers will be able to withdraw instead of 35, 60,000 from their RSP starting August 16.
April 16th or August 16th?
April 16. Actually,
April
yesterday.
16th.
Yes.
That was yesterday.
Yes. Yes. So it is actually today.
Yeah.
Yes.
Okay,
And
fabulous. Thank you, Snezana.
Yes.
These were like the top questions on mind, and I feel like you have just succinctly answered them. And we will hope to do more of these because there's so many things to discuss, and without the funds in place, you cannot confidently go ahead and make any sort of purchase in the real estate market. So having that conversation with your mortgage broker is crucial before everything else. Right? So thank you, Snezana.
Thank you for having me.
Absolutely. More to come.
Yes.
Take care.
Bye.